Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about the news, what's happened in the last month, what's going on. There's tons of things. We've got a whole load of topics to cover here right now. And this has been a really eventful month. We've had interest rates where they've been slashed by lenders. We've had decline in house sales. We've had buyers coming back and loads more. It's an absolutely eventful month. Not only that, we've had the Leasehold Reform Act moving forward in Parliament. That is at committee stage now. They've been talking about that. So I want to cover all of that and more in this video. So make sure that you subscribe to the channel and hit the bell notification. Have a look around this video, guys. You'll see how close we are. We need about 400 subscribers now to get to 20,000 subscribers. So if you're not subscribed, do subscribe and hit the bell notification. And while you're here, smash like, tickle like, do something with the like button. That really helps us with the YouTube algorithm. We'll get more eyeballs then we'll get more subscribers and we'll grow the channel together. And share this video with friends and family that need to know what's going on in the property market today. So, this video might be a little longer. We normally have videos under 10 minutes. Let's see how we get on with this one. So first, the Bank of England. This happened this week. BOE sticks. So the rate's stuck and it's stuck at 5.25%. That was expected, but here's where this got interesting. Really, I'd say the pivot came. So initially, all the other meetings that we've had, they've always used the threat that rates could keep going up. They made a massive point of saying, we've actually removed that language now. So this is the peak of where interest rates are actually going to get. Now, the markets were hoping that they would talk about dropping rates faster, but they're not going to do that. They're not going to do that. That's just something they're not going to say. Their policy is, and that was addressed by reporters if you watch the conference, they're saying, why don't you tell us that you're going to drop rates this year like the Americans do? That's just not the way they do things here in the UK. And if they did tell you, let's just say they said rates are going to drop in March, if you were going to buy a house today, you'd pause that transaction, wouldn't you? Because you'd want to get that lower rate. And that totally makes sense. But they pivoted from saying that they're going to increase rates or there's a threat of increasing rates. That means we're at the peak of the market, 100% certainty this time, which is good news. Mortgage rates benefited in the last month as well. So mortgage rates have been dropping. And there are rates, there's a buy-to-let rate with the Mortgage Works at 3.69% for new customers. I couldn't get that. I'm an existing customer with the Mortgage Works. I got a rate this week of 3.99%. I decided to stick with that because if I change lender, I've got to pay for solicitors and it takes ages to do. So I fixed at 3.99 for 2 years for one of my properties in Hastings, which I was happy with. And that was a little bit cheaper than a couple of weeks ago. That was at 4 point something. So we're moving in the right direction. We've got buy-to-lets under 4%. We've got residential mortgages under 4% as well. Some of them have big fees. You've got to shop around, but that's way better than a year ago. So I'm happy that that's moved in the right direction. Now, some mortgage rates in the last few days have been edging up marginally as well. There are a few lenders that have gone down since the Bank of England meeting, and there's a few that have gone up. So it is important to shop around, use a broker, use the comparison sites and see what's going on. House prices, interesting data on this. This one, I think, was a surprise. We had the nationwide house data and they said house prices are up 0.7% for January. That was interesting to see that. And that gives us that little bit more buffer. So if house prices do go down, which are expected to happen this year, a lot of people are saying between 2% and 5% down this year, that gives people that little bit extra buffer, doesn't it? And makes them a little bit more comfortable. So that's a new high. And if they go down, they're going to go down from there, which is better. The leasehold reform stuff. This has been some of the most popular content on the channel. We've had about 300,000 views on the content on leasehold reform. So a lot of you want to know what's going on with that. Well, that's at committee stage. they're still speaking about that stuff on a regular basis. And I think this is good. They've had multiple meetings on this. And what they're now speaking about is ground rents. They're talking about abolishing ground rents. That discussion is finally happening. You could already abolish the ground rent if you extend the lease. This is good news though. Really, really positive news that that's being talked about and the ground rent stuff is happening. I'll keep updating you as that goes through. But I think as a parliamentary act, that is moving quite quickly. Everything's slow in government. The fact that they've had about 3 or 4 readings already, they're bringing stuff back in that they initially discussed in the King's Speech, is a good sign. I think they really want to get this done before the election. So that's a positive thing there. We had a pivot from the Bank of England, which I mentioned there, and the Federal Reserve. So both of the Federal Reserve, the Americans, the Bank of England in the UK, they're both talking about, well, the Bank of England is basically removing the language to say that they're going to increase rates anymore. And the Federal Reserve are openly talking about multiple rate drops this year, which is really, really positive. So that's good. Both places, the Fed and the Bank of England, are saying inflation's going to drop really fast in the next few months. The Bank of England, however, did say that they expect it to go up about 0.75% by the end of the year. So the Bank of England feels that inflation could drop below 2%, but then go back up to 2.75 based on energy costs. But it's still moving in the right direction. The Federal Reserve has said, yeah, interest rate drops are on the way. They won't specifically say when, but that's a positive sign as well. This was an interesting one. So Rishi Sunak wants to get voted back in. Of course he does. Well, he hasn't been voted in ever, but he wants to get voted in officially this time, rather than just taken over from somebody. And so Rishi Sunak is looking, the Conservatives are looking at launching a 1% mortgage. What that means is you only need 1% deposit. It's for first-time buyers. There's already a scheme like this for a 5% deposit. The reason this scheme is quite good is for first-time buyers, it insures them. The government insures your payments. So the bank lending criteria is less strict. The bank is covered. So if you defaulted, you didn't pay, or had some problems with that property, the bank would be insured. So it means the lending is a little less strict and it gets some people on the property ladder. Now, you're still going to pass affordability checks and stuff like that. But I think this could help a number of people. There are tons of people that have got good, well-paying jobs that are paying crazy high rents that could afford a property, but they just don't have the deposit. So 1% mortgage. A lot of people were saying in the comments on that video, this could take ages to sort out. I don't think so, because they already have the same scheme. It's just 5% deposit at the moment. So it's just amending something that's already there, right? There's already agreements with the banks. All this stuff is quite easy to change. So I think they could implement that quite quickly. I think they'll see that official in the budget. Inflation. So inflation is sticking around. I think we're at 3.9, aren't we? Comment below if I'm wrong on that. I think it's 3.9. It's expected to marginally go up. The January data that we're going to get in February is expected to actually be slightly higher, and that's based off flights. Interestingly, my partner Katie and I were looking for flights yesterday, and we're looking to go somewhere for Easter, either to Asia or to America, and the flights are significantly more than normal. Some of them are double the price that we would normally expect to pay at this time of year. So interesting stuff there. So inflation is going to be driven up a tad in January before it drops in the February, March and April data, and that's mostly from flights. That's good, because not everyone needs a flight, right? So it's better that the inflation is driven by something like flights rather than milk and eggs and staples that people need on an everyday basis. Let me know your thoughts on that. Do comment on anything that you've thought, or any opinions before they go out of your head as we're going through the video. What else is going on? Buyers are back. That's interesting. So there's lots more buyers are back in the market. Lots of people are registering with Rightmove and estate agents, and that's because last year they just sat out the market. So there was some pent-up demand from people that could afford to buy, that wanted to buy, that wanted to see what's going on. Now they've just seen that interest rates have 100%, 99.9% peaked. They're seeing interest rates, mortgage rates even come down, so there's better deals there. And maybe they can get a discount on those properties as well. So there's more buyers in the market, which means short term, you're less likely to have a massive crash short term, but it doesn't mean that couldn't happen by the end of the year. Here's an interesting one as well. HMRC. You don't often put interesting and HMRC in the same sentence. HMRC are saying in 2023, there was 20% less sales. That's going to hit their pocket as well. They make a lot of money off the stamp duty on the sales and that kind of stuff. So yeah, it's definitely was a difficult 2023. So far this year, we've started off okay. We've got house prices up. We've got more buyers in the market. We've got mortgage rates down, improving affordability. Pay rises are on average 6% up, which is above inflation as well. So it's a fairly good start to the year. Doesn't mean it couldn't be a very difficult year this year, but it started better than most would have thought for sure. Let me know your thoughts on all of this stuff here. So to recap, Bank of England sticks on rates. Mortgage rates are dropping. Probably that's not going to happen much more this month. House prices are up. Leasehold reform, the ground rent stuff is moving forward on that. 1% mortgages, what do you think on that one? Inflation stuck, but it's going to go up. Buyers are back in the market and 20% less sales. That's a busy month in my opinion. Let me know your comments below. Do like the video, subscribe to the channel and hit the bell. If you didn't buy the fundamentals of property investing yet, I'm going to link that below. It's less than 50 quid still. We're going to keep putting that price up. Do click on a link, get enrolled, and join us on that full property training. At least check it out and see what that's all about. Do check out all the other content on my channel, including this video right here.